So our special segment for today is about the Australian dollar, Aussie against the US dollar. We continue our ride of currencies. So here are 5 characteristics for the Aussie dollar. First of all, the Aussie dollar is a risk currency. Risk means that if we have party time in markets like now, the Australian dollar is in demand. The interest rate is higher in Australia. Even after all the cuts, it's 1.75 at the moment. Used to be 6 or 7% at the peak, pre-crisis peak, and in general, it hasn't reached zero. It has a long way to zero. It's sort of a risk currency, or enjoying the commodity boom, things like that. In times of trouble, again, reactions can be different. For instance, a bad US figure like the non-farm payrolls we had on Friday pushed, of course, the US dollar lower across the board, and that favored the Aussie. But that's not the only reason for rise. It's also the speculation that we'll have no rate hike. Means in the United States, that means cheap money will remain in the United States and flow elsewhere. Where to? The Australian dollar. Aussie against the yen used to be one of the biggest carry trades pre-crisis, and then of course the music stopped and everything crashed. Okay. Another characteristic that I see for the Australian dollar is that economic data has a longer impact. A recent example is the GDP figure. Big beat on expectations, and the impact was longer than the immediate session or two. It lasted, well, it lasts for a long time. And another thing to watch is that, for example, employment figures, when they're a big miss or a big beat, they also have a long-term impact, okay? China, the Australian dollar, another special characteristic of the Aussie is that it's sometimes seen as a proxy for China, because China is Australia's #1 trade partner. China buys commodities from Australia, iron ore, copper, gold, you name it. I think also natural gas. Anyway, and the China is sort of Chinese economy, #2 in the world, led the economic recovery after the crisis. They injected a lot of stimulus. So sometimes for the Australian dollar, Chinese figures take over. For example, if we have an Australian figure released in the same night as the Chinese figure, not in all cases, but sometimes the Australian data, important as it may be, is ignored in favor of the Chinese one. So if you're trading a specific news release in Australia, watch out for adjacent Chinese data. Okay? And another characteristic of Australia, more so of New Zealand, but also Australia, is some figures are released only on a quarterly basis. We mentioned GDP. Just one final GDP, no revisions. The next revision will be in the next report 3 months later. So if in the US and the UK, it's 3 times until we get the final release, only to be revised again afterwards. But we have 3 releases every quarter. In Australia, it's only 1 every quarter. The same thing goes for inflation figures, only once per quarter. Both the PPI and CPI have are released on a quarterly basis. So this also is a characteristic. It makes every publication more important. At least employment is released and retail sales once per month, different from New Zealand. Okay, so another thing to watch, Australian figures, when they're not attached to Chinese figures, are significant market movers. Okay, and another thing I find, and this is maybe controversial, every trader with his own thoughts about technical behavior, I find the Aussie dollar as consistently having positive technical behavior. When in trend, it sort of trades the uptrend or the downtrend quite well. When in ranges, it respects ranges and old levels. It's not always the best currency pair to trade. Doesn't always top the list, but it does. It's sort of consistently in the top 5, top 10, if you wish. Okay, so that's the last and 5th characteristic of the Australian dollar. I would say that the Australian dollar is gaining more and more traction. I think it's the 4th currency pair in terms of trade. Of course, euro dollar #1, dollar yen #2, pound dollar #3. And if I'm not mistaken, it's the Aussie dollar. So more people trade the Aussie against the US dollar than trade the Swiss franc, for example, against the Aussie dollar. Okay, it's also ahead of its other pure commodity currencies, the Canadian and New Zealand dollar. Okay, so it has good technical behavior and enjoys also more volume. Of course, there's a big gap between number 1, number 2, number 3, but it's still up there. Okay, the Australian dollar. Okay, so that's our special segment for today. The Aussie dollar, again, risk currency, rises when the mood is good, falls when the mood is bad. The economic data has a longer impact, but the immediate impact can be overshadowed by Chinese figures. It's the best proxy for China. Some figures released only on a quarterly basis, making publications in Australia sort of more impactful. And technically, it's one of my favorites, okay? I mean, over a long period of time. Okay, that's a special segment for today.